All right, traders, so we are now looking at another trade setup that I'm going to be looking at. Now, the market hasn't given it to me yet, but it's going to be this Euro Aussie. We're going to be looking for a long opportunity. What we see here now, we have mixed signals with Ichimoku, but we do have a TK crossover that's bullish. So that's the first sign of the market becoming strong. Looks like we're starting to see span A and B mixing together, so they're aiming to the opposite directions of each other. I mean, actually they're aiming towards each other, so you may see a crossover eventually. Probably see that crossover by the time you get a Kumo breakout, if you get that. But what the market has given me now is a possible 1, 2, 3, and then move higher. So I have a zone here. I'm looking to trade this zone. I'm looking to trade long in this zone. Now I want to see price action, okay, honor this, because I got my crossover and I want to see the market honor this little Kijinsen support level here. This is my whole zone. I'm looking to trade inside of this zone somewhere, or when the market breaks out of my zone. And I'm going to be looking to trade to the upside here. So we're going to look for a long trade here. Chiku span is above the price currently. So we have two bullish signals and we have two bearish signals. They're actually two bulls and two bears, with price being below the cloud is bearish and your future is still bearish. So when we look at our trade setup, the main thing we're looking at here is catching the momentum of the market, and then looking at the structure of the market also. So the 1, 2, 3, 4 pattern will kick in. But we want to see our levels honored. If the market honors our level and we see that 1, 2, 3, 4 structure, that 1, 2, 3 structure break in, that's where we want to really get into our trade. So we look to determine where that 3 level could be, because we can already see we have the 1 and we know we have the 2. We're determining our 3 level will be at this support level here. Now the market could break, go lower, and set up down here even, or go somewhere else even farther lower. But the most immediate level is this zone. So what you have here is you're inside of this zone right here. This is your this is a strong support and resistance zone. All right, we want to see if we honor the bottom of that zone. That's why we're saying the market will go 1, 2, 3 at this level and then maybe higher. That's the reason why. Okay, so let's see what we get with this. I'm not ready to set up the trade setup yet, but that's what I'm going to be looking for this long opportunity. So let's see what it does here. While we're below -80 on Williams %R, we do not want to be going long. We want to see that thing break above -80. Then we're going to set ourselves up for a trade setup. All right, guys. So keep our eyes on this. We'll revisit this. All right, traders, I am back with the rest of this video. And I wanted to do this, guys. I wanted to do it, the pre-setup. I wanted to show you the setup and then the after effects of the setup, how the market moves, and let you see what we looked at and thought the market might do prior to the market doing it, just based off of, really, guys, support and resistance, really, when you come down to it. But Ichimoku does help you a lot and shows you a lot of things. So our pre-trade, we were talking about the market bouncing on this level that we drew here. So we had this zone. This was our zone of support and resistance. But really, if we take the zone away, we still had the Kijinsen Tenkan-sen zone. So we had that TK zone. So with this zone, with the market being inside this zone here, where Tenkan-sen and Kijinsen are, the green line and the blue line. So this blue line is Kijinsen. This green line is Tenkan-sen. And you could see here. And we had our crossover, which was bullish. All right, so we had a crossover, which was bullish. So you got a TK crossover that was bullish. Your future is still dark, but we took the trade and took a trade based off of the market sentiment at that time and breaking out of the this zone of Ichimoku. Because when we get a crossover that's bullish, that's the first sign of the market changing structure, right? Changing direction. The market moves faster than Ichimoku, really. So the move started back here. And by the time you got this crossover, we were in the pullback of the move. So therefore, we caught the 1, 2, 3, 4. So we look for our target also, where we're going to shoot for our targets. Now, this market moved up to this flat level here. This is a strong support and resistance level. So therefore, we're looking at taking our profits already at that level. But you could also look at the market moving a little higher. So if you can't find support and resistance, I always tell you guys, just draw from the flat clouds. That'll give you really strong support and resistance levels. You could see how it works out. All right. So that's good for you if you don't really know how to find levels real well. That will help you. But you can see we talked about this trade. We set this trade up way before it happened. And then that trade went that way. And it doesn't always work this way, guys. It's just because you see the same things over and over in the market. So you kind of look for those levels where the market's going to react as it usually does. Now, you know, we set ourselves up for a high probability trade with the market reacting in a certain way based off of where the market is at levels. So one thing that we always teach is that we trade level, signal, trigger. We need a level to trade first, and we always know where that level is. So even if I wasn't in a trade now and the market was down here, I would say, well, maybe my level is this point where I'm going to short it or whatever. But you always want to have a level where you look for the market. That level is like your train station. So when the train pulls into the station, that's when you get into the trade. All right. Other than that, the market's between the train stations. You don't need to jump in the market between the train station, because if you fall off the tracks, you're going to get your leg chopped off and it's going to be, oh boy. So we don't want to have that happen. So wait for the train to get to the train station. Go get your ticket, which is the price action, and then you're good to go. All right. So this market still may break through this level, but it may react with a pullback because this is a strong level. So we may get that correction and then a break. So at that time, you'll probably get a Kumo breakout. So if we get the correction, what we're going to be looking at basically is the market dropping and then correcting and moving higher with a Kumo breakout, quite possibly having a future that's bright. Now, with Williams percent R being above that -20, that's strong momentum still to the upside. So while it's above -20, if it's breaking levels, then I know it's going to continue. Now, if it can't break this level and we stay above -20, then more than likely we're not breaking that level. So we'll probably see the market correct itself. But yeah, I wanted to show you guys the setup. I didn't want to show you the setup afterwards, because you know what people are going to say on YouTube. Anybody could set up the trade. Anybody could show us after the fact, blah, blah, blah. This is before the fact trading, guys, because this is what I do. This is what we do. All right. And it's based off of using Ichimoku. But also, guys, if I take Ichimoku off the chart, I'm still going to trade my zones, my levels. And this level lined up with Ichimoku perfectly. So therefore, it gave us that opportunity for the move. And then we want to look at our price action and so forth. All right. Now, one thing you got to always remember about your money management and so forth. And then now I also want to let you know, once the market moves into our zone, we could trade the zone, but the way we trade the zone is we call walking the zone. So if we walk that zone, we're going to watch that market drop down into the zone. Now, when it drops down into this zone, we put our entry at the top of the zone and the market may be in the middle of the zone. But if the market drops lower, we'll move our entry to the middle, and then we cut out a whole bunch of risk for that stop loss. All right. So this is high probability trading. What we're trying to do, keep you safe with it. There's no way to really guarantee what the market's going to do, but you could guarantee how much you lose. Okay. Because you set up your stop loss. All right. So that's the trade, and hopefully you liked it, guys. I'm wanting you to come to my website, www.fxatOneglance.com. You could see it up there in the corner right here. So if you come to my website, get an opportunity to look around. We're changing up stuff, and also would like to have you become a member. Basically, have a one-time 1-year membership for $250. Never will you see a lifetime membership from me again, because I offer so much content, guys, that I am overloaded with content that is well worth more than what we're asking for. Okay. And you can ask any member and they'll let you know. All right. But just come visit us, see what you think, and www.fxatOneglance. All right. Till next time, guys, have a great one. God bless. So long.